That's all we discussed in price action. But we'll be coming back to that when we're talking about patterns in the charts. That will be much later. But let's do justice to indicators. Want to see how we can use indicators to trade the financial market. Want to see how we can use indicators to trade the financial market. What are indicators? Indicators are tools that helps us to interpret price. They help us to interpret price. These things are indicators. We have so many indicators in the market. Most of them, some of them, in fact, most of them are lagging indicators. When we say lagging, the normal English word lagging in the sense that they do not give us real time of price, what is happening to price. So if you're using indicators, you should know how to use the indicators. When, if not, the market may have left you before the indicator will be giving you a signal for a buy or a sell. So indicators are good, yes. Well, if you are actually a scalper, indicator may not be good for you. What you really need is price action, the naked chart. That is what you need to interpret the price. But if you are a swing trader, you would want to use indicators on your chart because the price may have done what it wants to do before the indicator will be giving you a signal for a buy or a sell. But all the same, that's why we decided to teach you price action so that you will understand what you need to do. If you understand price action, if you understand the natural rhythm of price, if you understand the anatomy and physiology of candlestick, which we have honestly done justice to, you will see that you'll be having a good entry into the market, and you will now employ the indicator as a confirmation to your bias. Please understand me. I said if you are trading pure price action, naked chart, natural reading of price, do you understand? What you do is that it will help you to have an early entry, one, and also it will help you. What you use indicator for is just a confirmation, a confluence that, look, my bias or what I'm thinking is correct. I told people that we are buying or selling, we are selling Euro JPY and NZD JPY. If I was using indicator, it is now, in fact, the indicator have not given me a signal for a buy, sorry, for a sell. The indicator is yet to give me a signal for a sell. If the market continues selling tomorrow, that is when I will be looking at indicator giving me a signal. But believe you me, as a price action trader, as somebody that understands the natural rhythm of price, I have engaged that market for a buy, sorry, for a sell. And that's what I told each and every one of us. You must understand the natural rhythm of price so that you can have an early entry. Because what we do in this market is that we try to catch the market early enough. It's just like when you go to the market, any of the markets in your location, depending on your country where you are. The markets have the time they open and the time they close. If, for example, like in Nigeria, we'll have the markets or markets. Now, ordinarily, on the average, the market opens at 8 o'clock. Averagely opens at 8 o'clock and closes by 6 o'clock. You observe that 6 o'clock, the people responsible for the different gates or enter and exit into that market, if it's a very organized market, they have the gate, the entrance and the exits. Now, people in charge of those gates, the gates, at 6 o'clock, they will be strolling down to the gate to do what? To lock up the gate. And now sometimes those days when we were young, we usually, go to the market. We observe that even at 6 o'clock, you see people rushing into the market. At 6 o'clock, they are rushing into the market. What are they rushing to do? They want to pick up one or two things before they eventually close the gate. Now the question is, at that point in time, what will somebody buy? Since 8 o'clock, people have been buying and selling, transactions have been going on. And you are entering the market at 6 o'clock. What do you expect? You expect to buy leftovers. You expect to buy leftovers. When you expected to buy something fresh, you expect to buy leftovers. If it is tomatoes you want to buy, you know you want to buy those ones that are strong, they've bought the all. What you are expected to buy is that you buy the one that is broken or the one that is bad. That's the one you will buy. So it is the same thing with entering the market. You enter the market when you did your your basic class, you were told the different sections and when they open and when they close. Now the question is, when you want to do analysis, you do analysis waiting for a particular market to open or to close. While the next one opens, you engage your buy or sell. So when let's take for example, the US section closed, the UK sections open at 8 o'clock, the GMT plus 1. 8 o'clock, 9 o'clock, sorry, GMT plus 1, 9 o'clock GMT plus 1, 9 a.m. GMT plus 1, and closes at about 5 o'clock GMT plus 1. Now, imagine somebody that entered the trade at 2 o'clock, 2 o'clock, or 3 o'clock, or 4 o'clock, and said he wants to trade UK section. By that time, you don't, before you know it, the market will reverse. Because what happens in this market is that if you observe the market very well, because as you are trading, you are learning. Many persons, some persons ask questions today on the platform, that's the Forex Master platform, that look, US 30 is selling, Euro JPY is selling. Why? That do they do the same thing? What I told myself, I actually did not respond to that because I was driving. I couldn't respond while driving. But when I saw that message, I was like, oh man, okay, some guys are really observing what is happening in the market. It's a good one. You do more, you observe what is happening in the market and take a decision. So I actually responded to that question. So what we're saying is that you should know when you enter the market to buy and to sell. If you observe, just be observing it, you see that when the market, the UK section opens at 9 o'clock, GMT plus 1, while before they will close, the US section would have opened. US section opens at 2 o'clock, GMT plus 1. Now, when the US section opens, for example, ideally, like 80% of the time, once a particular pair in the UK section is buying, immediately the US section open, they will counter what the UK section have done. They will counter it. At that point in time, that's why you've observed. If I am in a trade, I always point at, see, you want to enter US section, lock your entry. Because US section, too many things can happen. If the market was buying in the morning, US section will come and counter what they have done. Now, while they are doing that, once the UK section is closing, they do a little counter of what US section has done. And now, before you do that, the market will now set. The US section will continue until they hand over to the Asian section. Well, these are the time to trade, and that's why we take it. I think the person that took you on basic class really did this foundation very well. I trust her as well so much. She did all of this. She gave you all of this foundation. Unless you weren't serious during that time, then that means you need to contact us to take you on basic class. If you ask me to take you on basic class, the truth of the matter is that you're going to pay me. That's the simple truth. You're going to pay me if I want to take you on basic class. That's why I said this class that we are in, you need to be very serious, because by the time we move to advanced, I wonder who you want to come and take you on intermediate class. That will be a different negotiation altogether. That's why I keep telling and stressing people should come to class. It is not everything we record and put on the YouTube. There are some topics I don't put in the YouTube page because I know I don't want it to be in the public domain. It is something I use in my trade. Okay, so now what we are discussing what is called indicator, and one of the indicators we'll be discussing is moving average. Moving average. Moving average. That's the indicator we want to discuss. Please, if you have any distraction in your house or wherever you are, please avoid that distraction and pay attention. Moving average. Moving average is a very important indicator. I will show you tonight how to use moving average. If you look at my chart, I use moving average. I will show you how to use moving average tonight, so that if you apply it on your chart, even if it is moving average you want to be trading, you can be successful in this Forex market. That I can assure you anytime, any day. Thank you to your mommy to do it. So I can assure you, you'll be successful in your trade if what you want to trade is just moving average. I'll go to the chart. Sorry. We'll go to the chart immediately so that we'll get all these things as they are. Okay. Before the chart, we'll go to what's it called? The slide. Now let me share my screen. All right. I said moving average is simply the average of price. The average of price. What has price been doing averagely within a particular period? When we say period in charts, when we say period, we mean a particular, how do I explain it now? When we say period on our chart, we're talking about a particular number of candlestick that the price that price has gone through. I don't actually do better way to explain it. When we say period, we mean if it is also period 5, it means 5 candlesticks. Get the price of 5 candlesticks and divide it by 5. That is the period, the average that price have done. Now, if you are using moving average and they tell you that price is above a particular moving average which you have plotted, it means that that price is increasing. Now, let me give example. I usually give example with the vehicles. When we have some vehicles, like some automobiles of different make, we have Camry, we have Toyota, we have Lexus, we have Mercedes, we have Honda, we have Volkswagen. Okay, let's say 5 of them. Now they are moving at a particular speed. The 5 vehicles, you agree with me, will not be moving at the same speed. No, they will not be moving at the same speed. They'll be moving at different speeds within a particular period. Now, when they are moving at this speed and they tell you, out of these 5 cars, they give you the different speed the vehicles are moving. Now they say, calculate the average speed of these vehicles. The average speed of these vehicles. You agree with me in our simple statistics. In our simple statistics to arithmetic, what we do is that with different speed, 5 of them, and divided by 5. You have the average of this average speed vehicles are moving. Now, it is moving at a speed that is higher than that average speed. That Rolls Royce is faster than most of the vehicles on that train, most of the vehicles. So that is what we do on the chart. When you have a moving average, because price moves from one point to the other. This is the month of May. We started May 1st, and this is about May 18th. So that means we have gone deep into May. This moving average, what does it do? It gauges the price. It gauges the price. Now, at any point in time, it gives us the average price that the market, a particular pair, have done. Now, how does it concern you, traders? What is our concern there is, if price is, because this moving average serves as dynamic support and resistance. Take note, dynamic support and resistance. Let me get this chart. Okay, let me take it from here. So he said the moving average indicator is one of the most used technical indicators of forex traders. It's a formula used to calculate the averages of a market movement over a longer period of time periods, usually weeks or months, rather than days, to identify trend, which is vital for a good forex trading strategy. The moving average are popular among forex traders because of the indicators' ability to collate data from a specific time period into a bird's eye view of recognizable patterns and trends. We have different types of moving average. We have simple moving average, we have exponential moving average, we have smoothing moving average, and we have linear weighted moving average. The simple moving average and exponential moving average are two main types of moving average used by forex traders. They are used by forex traders. Two main types of moving average used by forex traders. Like I told you, I don't like reading, Charles. Don't like reading. But what we do, why do we use moving averages? We use moving averages to do what? We begin to ask, why do we use moving average? One, we use moving average to identify trend. To identify trend. Take note, why we use moving average? One is to identify trend. Who is talking? Okay, I said we use moving average to identify trend. When we say the trend, we say, is the trend bullish or is it bearish? We use moving average to achieve that. Secondly, we use moving average for entry and exit. Entry and exit. We use moving average for entry and exit. We use moving average as support and resistance. We use moving average as support and resistance. We use it as entry and exit, and we use it as trend identification. These are the three ways we use moving average. A moving average, okay, there's what we call moving average crossover. When you are using one moving average, We'll tell you how to use it as a trend identification, as support and resistance, and as entry and exit. But there's what we call moving average crossover. Remember crossover, when you're crossing from December 31st to January 1st, they call it crossover. Is that correct? Crossover. We have moving average crossover. Now, when we say moving average crossover, we're talking about two moving averages of different periods. The higher the period, take note of this, the higher the period, the slower the moving average. The smaller the period, the faster the moving average. Take, for example, I gave example of the 5 vehicles that if I tell you, Mr. Yezel, calculate the moving average of these 5 vehicles. Now I said, Mr. Merua, calculate the moving average of 10 vehicles. You agree with me that Mr. Yezel will give me his own result before Merua will finish. Why? Because Merua is doing almost 2 times what Yezel will be doing. So that is why we said that the higher the period, the slower the moving average. But the smaller the period, the faster the moving average. And now, when we're talking about the moving average crossover, we're talking about a period when a smaller moving average crosses the bigger moving average. When they cross is a signal. Who is using iPad and writing on my screen, please? Who is that? Who is that using iPad to write on my screen? Please, you need to remove it. You need to clean it. You are messing up my screen. The person that is using an iPad, please clean it up. Okay, let's continue. Now, I said, well, I've given you different statements. That's why sometimes I say take note, because by the time I continue, I might not really go back to all of these things I'm saying. As we're talking, the spirit is leading. Okay, so now we'll go to our chart and start looking, understanding some of these things. Now, let's go to our chart. Let me get my chart. This is the one. Okay. All right. So we are in for our chart now. Okay. Now, let me remove this one so that we'll have a better screen, a bigger screen to see. Please, somebody should confirm you can see my chart, please. Confirm you can see my chart.
I can see, sir. I can see.
Okay. Let me remove this thing because we are no longer doing support and resistance. Let me remove some of this thing. Okay. Okay, now I'll remove this. I understand some of us use this phone. Some of us use phone. Please, I want to advise you, if you have money, do well to have a laptop. If you actually want to trade the financial market, it is good you use a laptop. Laptop will give you a broader view of what you are doing. It's better you use a laptop, get a laptop. Even no matter how cheap, you should just, even if it is a fairly used laptop, try to get it. It will help you. It will help you. It will help you in analysis. Personally, I don't like using what's it called? I don't like using phone for analysis. No, I don't like it. I don't like it. It gives me, it doesn't make me understand what I'm doing. It's only when I'm trading synthetic that I use that. But I think that's not what we're talking about here. But use for you to understand the broader view of the market, you need to use a laptop. It's not negotiable. It's actually not negotiable. Wow, this man, Bitcoin is coming to 28,000. Okay, 28,000. Okay, no problem. So for now, this Bitcoin will buy. Bitcoin will buy. To buy small. Buy. Buy small. Anybody have like one good thing about fxpace is that their spread is very low, very, very low. And trade Bitcoin with 0.01. But some brokers will not allow you to do that on their platform. And trade with 0.01 Bitcoin. The only thing is that it has very high margin. But if you have a $50 account or a $100 account, you can trade Bitcoin very well. Just 0.01. It has high peak value. A little move can give you good money. But I'm looking at this Bitcoin. A short buy it wants to do to continue selling. Okay, sorry, I just look at this thing. Okay, now look at what we are saying. I want to put my moving average on this chart. When I remember I said we have moving average. We can say moving average 20. Okay, let me tell you the kind of traders and the moving average. If you are a scalper, we all understand who a scalper is. That was discussed at the later part of your basic class. If you are a scalper, the moving average that you will use is 5 and 10. Moving average you will use is 5 and 10 if you are a scalper. If you are a day trader, a scalper is somebody that does not stay long in the market. Hence, you're not expecting too much money at a time. A scalper can enter over 20 or 30 trades a day. So he will be looking at max 10 pips, 20 pips, he'll run away. A day trader is somebody that opens and closes position within the day. That man, a day trader, does not pay for swap, does not leave his trade overnight. He does not pay for swap. A broker likes a scalper because the scalper usually pay hugely for spread. This thing is what you did in your basic. I'm just doing a recap so that you understand me when I say things like that. A day trader can enter like 5 or 6 trades a day. But the idea is that he will close his trade within the business day. Before, what it means is that before 10 o'clock GMT plus 1, the man would have closed his shop, his trade, and go and sleep and wake up and wait for the next day when the market has closed. He doesn't like paying swap. Okay. But that man, the moving average he will use is 10 and 20. 10 and 20 moving average. That is what he will use. A day trader. A swing trader would use 20 moving average and 50 moving average. 20 moving average and 50 moving average. A swing trader is one that will remain in a trade and suck the milk of that swing. When we say swing, swing can last for 3 days, 1 week, 2 weeks, or even 1 month. But on the average is 1 week. The man will stay in that trade for 1 week. Brokers does not like that man because he pays spread only once and stay long in the market. But what the man will be paying, swap, and swap is negligible if you are in profit. It's just like those of us that are in Euro JPY, we are in good profit. We are running a very good profit. Most of us, we want to leave our trade till tomorrow because you might wake up in the morning, and you see that the market is still in profit. Some of us will still leave the trade. Most of us will leave the trade running. Most of us will leave. For me, I'll leave my trade running. Why? I'm ready to pay swap because I'm still making money. So what the broker will take as swap is not much. It's something negligible. Based depending on what, since you're in profit, something negligible actually. Now, a position trader uses 50 period moving average and 200 period moving average. 50 period moving average and 200 period moving average. That is what is a position trader. Position trader is somebody that leaves his trade for like at least a month. That's the position trader. He can leave his trade for like a quarter. He can leave his trade for biannually, that's 6 months. He can leave it for 1 year. These are position traders. And position traders have good equity. Good equity. They can use $200 as stop loss for a particular trade. But when the market go their way, they would gain massively. Okay, so I've just said that I actually do not encourage you to be a scalper. That is why I'll be talking less about scalping. But for you to be a day trader, you'll be looking at 10, 20. For me, I like using, I'm a day trader. Yes, I'm a day trader. But I'm both a day trader and a swing trader. I can leave my trade for, if I see the trade is giving me profit, I can leave it for some days to run. So the moving average that I use is 20 period moving average and 50 period moving average. But let's start from day traders. We're saying day traders use 10 and 20 as their moving averages. Remember, when we did price action, we told you that, see, you need to have 2 time frames. One for analysis and a bigger, longer, the higher time frame for analysis and the smaller time frame for trade. For your trade, that's what we advise. And a moving average, an indicator now, we're advising that at least you should have 2 moving averages. 2 moving averages. One for direction, another one for entry. Now, let us plot the moving average. If you're using a laptop, how do you plot your moving average? Come to this point where you have indicators here. If you can see my mouse here, you just click, you see indicators. Come to trend indicator. On trend indicator, you see a drop down. Go there, you see moving average. You will see moving average. You will see moving average. Click on the moving average. Once you click on the moving average, you see this one is period 10. This is period 10. And I told you we'll have 4 types of moving average. We'll have exponential moving average. We'll have simple moving average. We'll have smoothing moving average, and we'll have smoothing moving average, and we'll have linear weighted moving average. These are the 4 moving averages. But of a truth, 99% of traders uses the simple moving average and exponential moving average. But if you plot all of them, the differences are not much. It's something negligible. But most traders use exponential moving average and simple moving average. Sometimes you see it as abbreviated as SMA, which is simple moving average. You see some persons will say EMA. EMA means exponential moving average. Now, what do? We'll come to period. Don't worry, I'll teach you different types of moving average. If you look at my chart, you see different types of moving average. I'll teach all of them how to use them and how I use them. Okay, now I have moving average period 10, exponential. Exponential is used when you want for entry. Exponential moving average is used for entry. And it is most times used for the smaller period. When we say period, look at this thing, I say period 10. What this thing means is that immediately I plot this thing, what I have told the system is that system, please give me the average of 10 candles in this time frame. Give me the what's it called? Give me the average of what the 10 candles have done. That is what I have. That's the command I have given to the system. Give me the average of what 10 candlesticks have done. Now, what the system will do, the system will say, okay, thank you very much, sir. I will do it. The system now will plot it for me and give me the average. Let's do it here now. You'll see the shift is 0. The moving average is exponential because it's 10 period moving average. Apply to close, apply to close, apply to close. It means that the close of the 10th candle, that is when you give me the average. If you say apply to open, there are different types. If you say apply to open, if you say apply to open, it means that when the market opens, the 10th candlestick open, that is when it will plot it and give you the average. If you say high, it means that the high of that candlestick, when it gets to the high, that is when it will plot it and give you your average. So it depends on what you have told the system. That is what it will do for you. But in this instance, we say close of the candlestick. Now, the style is that you want to change the color. You want to give the color, any color of your choice, any color you want, any color at all. This instance, let me put blue. Let me put blue. Now, if you want to thicken the blue, if you want it to be thickened, you use any of these and thicken your blue, depending on what you want to achieve. Now you click OK. Have you seen the moving average on my chart? Look at 10 period moving average on my chart. This is 10 period moving average. It's like a thin rope that is following the price. If the price is going up, it will be following the price. If the price is going down, it will be following the price. That's why we say it is dynamic support and resistance. Now, look at it. I remember I said the moving average can serve as support and resistance. It can serve as a trend identification, and it can serve for entry and exit. I will start with the first one moving average, just one here first, before we go to the crossover. Now, look at this moving average. Assuming I have this moving average, let's say somewhere around here. Somewhere around here. Now, look at it. Somewhere around here. I told you I like using current price. I don't like using, what's it called? Past action. I like using current price. Based on this current price, this is G1 time frame. What it means is that I am telling this candlestick that for 10 days, take note, for 10 days, because one candlestick is 1 day. For 10 days, please give me the average of price for the last 10 days. That is what I have given this command, and that is what it has plotted for me. It is telling me now that, look, for the past 10 days, that the market has been hovering below the moving average. The price has been hovering below the moving average. What does that tell you? Trend identification. It means that the market is bearish. It means that the market is bearish. Why? It is below the moving average. Then that means the market is bearish. And if the market is bearish, you have identified the trend now based on this. If the market is bearish, what will you be looking out for? You should be, as a trader, you should be looking for opportunity to sell that market. The next thing is, where do we sell? That's the next question. Where do I sell? Because I have identified that for the past 10 days, market has been hovering below the moving average. Therefore, the market is bearish. Question, Mr. Josh, where will I sell? And I tell you today that once you will sell when the price has come above, when the price come close to the moving average, that is when you are expected to sell. When the price, look at this, this market, look at this point. From this point, that is when the market came down and stayed below the moving average. From here, it is above the moving average, telling you is a buy. Now, at this point, the market came down to this moving average here now. Look at where it broke below the moving average. Now it went back. It came back again. When you see this thing has come down, don't worry. It came back to touch the moving average. Look at this point where it touched the moving average. Please, let me say something. Any time frame that you are in, Always wait for that candlestick to close. Always wait for that candlestick to close. This information I have given you, unless you are a trader, you will understand. But if you're not a trader, please write this thing down. Anything I tell you, I say take notes. I know why I say take notes. Once you say I am in 1 hour time frame, what it means is that you will wait for 1 hour to be completed, for that candlestick to close, for you to take a decision for a buy or a sell. So you must wait for 1 hour. So that is why you should have a direction. Look at this, for example, let me give you, look at this place now, this bearish candlestick. When this market was buying, we've done candlestick, of course, so we should be talking with temerity now, and that everybody understand what we're saying. When this candlestick was buying, when this candlestick had this wick up here, somewhere around here, let me put this horizontal line somewhere. When the candlestick got to that point, if to you, you think, hey, this market has started buying, or has started buying, the candlestick will be green as a buy candlestick. But what happened? If you don't know, you go and buy this candlestick on top here and say the market is buying. You didn't wait. You'll just be there. The market will leave you there, and the market will start coming down, and coming down. And you will see that in a massive, in fact, your account will be in a mess. Your account will be in a mess. And because you don't want your money to see your life account depleted, you will now hurriedly go and close it. And by the time you close it, you have lost money. That's why we say, wait for that candlestick of that time frame that you are in to close. That's why we say, go to a lower time frame. It could be 1 hour. It could be 4 hours. But within the day, in fact, averagely, if you are a day trader, you'll be looking at 30 minutes and 1 hour time frame. We've discussed that. In one of these classes, I think I've talked about, or Isn't must have talked about your time frame depending on a kind of trader. Your time frame depending on your kind of trader. A scalper does have nothing to do in 30 minutes. Time frame, no. A scalper stays, his portion is 1 hour, 1 minute and 5 minutes, max 15 minutes. He has nothing to do in 30 minutes. A day trader has nothing to do in weekly time frame, has nothing to do in weekly time frame. What he does is max daily time frame and take his trade in 1 hour time frame. That's what a day trader. A swing trader has nothing to do with monthly time frame, unless you just want to go and get an information. That is when what's it called again? A swing trader has nothing to do with monthly time frame. What he does is go to weekly time frame, check what weekly time frame is doing, come to H4 and enter your trade. A position trader, what he uses is either yearly time frame or monthly time frame, and he comes to D1 to take his trade. There is nothing that concerns a position trader with 4 hours. No. In fact, if you have decided I am a position trader, delete 4 hours, from 4 hours down in your chart. Leave daily, weekly, and monthly. That's what you're looking at. If you say you are a swing trader, delete H1 down on your chart. Delete H1 down on your chart. If you say you are a day trader, delete 15 minutes down from your chart. Delete 15 minutes down from your chart. If you say you are a scalper, delete from 30 minutes to monthly from your chart and be killing yourself there in smaller time frame. Okay, I think we are just doing a recap of what you learned in your basic class. Okay, now, the question, I told you that, look, this market has just given us a direction. Look at the candlestick. When you count this candlestick now, you cannot count the one that is forming now. Don't count this one that is forming. What this thing has plotted is this candlestick from this bullish candlestick, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. From here, this average that this market, this moving average has given you is what this candlestick have done. This candlestick, that is what they have done. 10 candlestick. And it tells you that the market is bearish. So what do? You as a trader should be looking for opportunity to sell. The question is, I ask, where should we sell? You will sell when price is close or on the moving average, but should be below the moving average. But price should touch the moving average. Just be waiting for price to touch the moving average. If you are on the 1 hour time frame, allow that 1 hour to close. It can break above the moving average, but closes below. Immediately closes below. That week it has left for you above the moving average is where you should put your stop loss. I am saying this so that even if I'm not around, you can trade without even asking anybody question. That's why I'm taking my time to analyze these things to you. You can trade it and trade it very well. You don't need Oga Josh to be around. I'm telling you this. I told you it. Okay, now look at this. Look at this. Look at this, brethren. Look at this. This one here, this candlestick here, this one here, where I put my horizontal line. You will see that this price was buying. Now the market came down, close below the moving average. It is now a signal for a sell. Where will you put your stop loss? Above this moving average. Above this moving average, you would have put your stop loss. And now you see that the market did not come to close to your stop loss. Your stop loss will just be enjoying himself. The market did not come close to the stop loss. So that era of, hey, the market just took my stop loss, it will stop. If you know where to put your stop loss, you cannot be terrified. You cannot be scared. The market makers will do everything they want to do, but you will not be scared. That place you have put that stop loss. Once market takes that your stop loss, it means a change of direction. It means that that direction has changed. If you understand where to put your stop loss. And most times, look out for either, if it's at the resistance, you want to sell, look out for something like an inverted hammer or a shooting star. Put your stop loss above that wick. If it is at a support, look for a hammer or a dragonfly doji and put below the wick and put your stop loss. Leave it there. It will be difficult for them to come back there and take your stop loss. Very difficult. But if they take it, I'm not saying they cannot take it. Remember, this market is not my own. I am telling you this with a measure of certainty because I have been in this market, trading this market for over 7 years, and I am telling you from experience. I'm not telling you from what I read from the books, my personal experience. Okay, so now, at this point, when this market break below this, now, for example, now you enter this market, look at places you can take your entry. Have you seen this point here? If you can wait, have you seen this point here? Is another place to take your entry for a sale. Because you know the trend is a bearish trend. The market is selling. So what will you do? Look for opportunity to sell. And when you sell, as long as price is below the moving average, wait for price to come and touch the moving average. If it touches it and is below it, it touches it, enter the market for a sale. You will be gliding well. Okay, this is for a one moving average. I have just told you. Let me plot the second one. It's the same way. I'll go here. I'll come to moving average. This is 10. I'll change it to 20. Now I want to use, if it's a higher moving average, I want to use simple moving average. What I need to do to differentiate the different moving averages, I'll put this one as black, any color of your choice. The color has nothing to do with the strategy. It has nothing to do with your trade. Any color that tickles your fancy, you can use it in as much as you want to see it clear. Now, I've just plotted 20 on my chart. I've just plotted 20 period moving average on my chart. 20 period moving average on my chart. Now, What is the trading strategy using two moving averages? That is where we come to moving average crossover. Moving average crossover. When the market is selling, the smaller period moving average, because it calculates the period faster than the higher period moving average. Are you sure I am with? Am I alone in this class? Please, somebody just tell me if you can hear me and you're seeing my chart, please.
Yes, we are seeing your chart. We are
okay. Okay. Okay, because the place was very quiet. I thought I was talking to me and my family. Okay, so now what you should be expecting is moving average crossover. If it is your strategy, moving average crossover, what you are waiting is, you see when the 10, look at 10, the blue one, when it crosses 20 period moving average, it is a signal for a buy. Sorry, for a sell. If it crosses it from above, because as the price is moving down, the smaller period moving average calculate fast and move, calculate fast and follow. If this thing has started buying now, you will see this blue now will cross this black and cross it very well. At that point, when it crosses, it is a signal for a buy. If it crosses from below, is a signal for a sell. If it crosses from above, if it crosses from above, is a signal for a sell. If it crosses from below, is a signal for a buy. Look at it so that somebody don't get confused now. Look at when it crosses from above, from below, sorry. Look at it, it crosses from below. It's a buy signal. Once you see this happen, the price has crossed from above. If this is a D1 time frame, because so many persons will complain, I am in D1. I saw that the price has crossed above the moving average. I went to smaller time frame to take my trade. I saw the market selling. Voila. When you see that happen, brother, don't bother to call Josh. Listen, what that means is that you wait until in that smaller time frame it crosses above the moving average. Whenever the smaller one, because if you go to lower time frame, you might see that the smaller one is still down while the higher one is up. That means selling. No problem. What it means is that market is doing a pullback in a smaller time frame. You wait until that smaller period moving average have crossed the bigger period moving average from above. Then you engage your buy. At that point, when you're engaging your buy, you are certain because the higher time frame has crossed already. The higher time frame is a buy signal. Now, the lower time frame, you are engaging your buy with certainty, with comfort that, see, at the end of the day, this smaller time frame will align with the higher time frame. Hope we are together. So that is what we are saying. Hello?
Please, come again with the previous explanation, please.
I said, wait, okay, let's go to this place now. You may not get this clearly now because this market has been selling for long. But let's go to a lower time frame. This is G1. Let me go to H1. Let's see what's happening there. Okay, that's why I told you that you may not really grasp what I am saying. See, in this lower time frame, have you seen that lower time frame is still selling? This H1 is still selling. Even if you were in that H1, even if you're in H1, have you seen that? Remember, I told you this is a buy bias. You see this market 1, 2, 3. This market have moved. This is like candlestick we thought yesterday. This is sandwich candlestick 1, 2, 3. Bullish candlestick in the middle, telling you a buy bias. I told you when I saw it in a high time frame that is a buy bias. It's a short buy we want to do if somebody wants to engage this market. Now, you may not engage it now, as long as this candlestick did not take out this week, this low of this 1, 2, 3, 4 candlestick have created. It's not as much as it did not take out this low, is a good opportunity for a buy. But some persons that is using moving average strategy, that is using moving average, will not buy until this 20 period moving average sorry, 10 period moving average has crossed the 20 period moving average from below, giving you a buy signal. But me, that is a naked chart trader or what's it called? Price action trader would have known that, okay, this thing, based on what I'm seeing and candlestick formation, that this thing, with no something, will be going in for a buy. So if this market start buying, I'll be in good profit than somebody that is waiting for a moving average crossover. Do you understand? But if moving average, because you cannot take all the money in this market, you cannot. Take the one that you can take and leave the remaining. Why many people lose in this market is greed. Is greed. 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 Before you enter the market, ask yourself, how much am I willing to get from this? If it is $10, but the market has given you $10, quietly close or shop and go and take a cup of coffee or a bottle of beer and drink. The market has paid you for that day. But you see some persons, to give them $10, they will remain. Hey, let it give me 20, let it give me 50, it can give me 100. The market will turn back and collect that $10 it has given you and hit your stop loss. That is greed. That's what we'll be discussing when we go to advance, how to avoid market psychology, how to avoid or avert greed in the market. So that is what we're saying. Now, I wanted to explain what I said earlier, like you said. What I'm saying is that if in D1, look at D1 here, D1, the market is bearish. Yes, we agree. Because our price is below the moving average. Trend has been established. It is bearish. Now, the next thing as a trader, what am I supposed to do? If the trend is bearish, you should be looking for opportunity to sell. Number two. The next question is, where will I sell? Good. The place you will sell is when price come back to that moving average. When the price come back, I've always told you, do not chase price. Do not chase price. If the market have left you, don't worry. There are 1,001 opportunity in this market. You cannot finish trading the market. If Euro JPY have left you, no problem. NZD JPY is there. If NZD JPY have left you, Oxy JPY is there. Oxy JPY have not started moving. That is why it has not started selling. That's why I didn't want to give it. I didn't want to say it. Oxy JPY is another place where we milk. It has not, it's not ready yet to sell for now because Oxy is a little bit strong. That is why JPY pulling it will take some time. Yes, but in no distant time, it will start selling if it has not started selling now. By the time I looked at it when I was in the office, I know it has some space up there to go and fill. But NZD and AUD, they are in the same family. So if NZD JPY is selling, in no distant time, AUD JPY will start selling. Opportunities are there in the market. If you miss one, don't chase it. Wait for it to come back to you. That is what I have told you today. Because so many persons that have gotten their hand burnt in this market is that they always chase price. Don't chase price. Wait. Agaracha must come back. That price that is running will come back to you. Don't be in a hurry. Sit down. It's better you don't lose your money. You don't even lose $1. You did not trade than you lose money. So that even that you did not take a position is even a position in itself. That you decide to stay out of the market is a position in itself. So don't be, hey, what will you trade? That's why some persons ask me, what will I trade? I don't say anything. For the past Monday, Tuesday, Wednesday, I've been trading NZD JPY, Euro JPY. I've not traded, if you look at my chart, I've not traded anything again. It's just that 2 pair. Why? Because I know the 2 pair, when it was buying, I bought it and collected my profit. It's selling now, I'm selling it again, I'm collecting my profit. So why should I go and be looking at, I might go to another one now, that one will be taking my profit. I'll be losing. So why? Why should I do that? Did I come to Nigeria to work, to look at welcome to Nigeria? I came to look for money to take care of my family and my personal needs. So we're not here to play. That's why I keep telling them in the weekly analysis, even if it is 1 pair, stay glued to that pair, stay glued to it. Forget about everything somebody is telling you. People that give you signal on YouTube, on this, tell them to wait. Let me exhaust this one. Let me suck this one. Because you might be in profit of $2 or $3. You go and somebody will tell you, see, Bitcoin is buying, or this one is selling. You go and enter Bitcoin. When you enter Bitcoin, Bitcoin starts selling. Bitcoin now will now be taking this your profit. Before you know it, you'll now be in the middle of nowhere. Okay, so what I'm saying is that where you need to sell is when the price has come to touch the moving average. That is where you need to sell. At that point, sell the market. Don't sell it when it is far from the moving average. It is wrong. Don't sell it when it is far from the moving average. Sell it when either the wick or the body touch the moving average. If it creates wick below the moving average and come back to close above, then what it has just given you is where you need to put your stop loss for a buy or a sell. Now, the next thing I said is that if you come to G1 where you take analysis, the market might be selling, but you go to H1, which is where you want to take your trade, the market is buying. You get confused. What will I do? Should I buy or should I sell? What you need to do at that point in time, if you're using moving average crossover, wait until the moving average is the price or the candlestick is below the moving average. In this instance, when the smaller period moving average has crossed below the higher period moving average, then you can engage yourself because it has conformed with the higher time frame. Hope it is clear. The person that said I should repeat.
Yes.
Hello. 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 Is it clear?
It's clear.
Okay. Now I want to give another secret of trading moving averages. I want to give another secret of trading moving averages. See, listen, please. Listen. Please mute your mic so that you listen. Please mute your mic. I try every day so that once you spend your data joining the class, you should have value for your time. That is one thing I keep struggling to achieve. See, when you're using moving average, let's say this is D1, you come to H1. Let me go to, I'm on H1 now. You come to H1. See, once you see this moving average, once you plot this moving average, once price is above the particular moving average, let's say 10 period moving average, the next place it will go, is if it moves from 10 period moving average, the next place it will go, it will be the 20 period moving average. 20 period moving average. That is where the next place it will go. So when it is a 10 period moving average, on top of 10 period moving average, the next resistance will be that 20 period moving average. That's why I said price, moving average serve as support and resistance. Let me plot 50 period moving average so that you see it. Let me use it to explain something. 50 period moving average. Let me put 50 period moving average. Let me leave it as simple. The higher the period moving average. Let me put green. I will say, oh, what's up? Now I'll put green. Look at green. Have you seen green? Look at where green is. This is green. This one is green. This one is green. This is green. If price, look at it, if price moves from this place now, if it is buying, if this market starts buying, once it's buying, you see that this moving average 20 will be tilting up. 20 will be tilting up. Why? Because price has started going up. Price has started going up. Now, once it gets up, you know what happened? If price has closed above this 10 period moving average, it gives you a signal for a buy. It tells you the market has started buying. Now, if the market has started buying, you as a trader, The next place you will take your profits, where you put to take profit, should be either 20 or 50. Once price break above 20 or this 10, it will go to 20. If it gets to 20, it will break 20 and it will come to 50. 50 period moving average. Another one is 200 period moving average. See, let me tell you, monitor this on your chart. Let me give you an assignment. Go to H4 time frame. Stay on H4 time frame. Anytime price comes to 50 period moving average and 200 period moving average, check what happens. If price is buying and it gets to 50 period moving average, check what will happen. Market will start selling. If we get to 20 period moving average, 200 period moving average, market will sell. Monitor it. That is where I gave, let me show you Euro and Euro JPY. Good. Look at Euro JPY. Look at Euro JPY. This is Euro JPY. Euro JPY, I took my profit at 20 period moving average because this market is selling. That is why you see this 200 period moving average is this black line. That is why you see it's coming down. Before, look at where it was. This evening star that created this evening star here, this three candlestick evening star. The price was just on top of the period moving average. Wait, let me get my chart I sent to you so that you understand what I'm saying. Because in UTB Trading Academy, we don't say what we don't trade. Let me show you. Hold on. Where is your class? Let me see. When I was telling you, let's say argument. Okay. Now, let me check that chart when we're buying. Let me see that chart when we're buying. I dropped on your chart so that you see what I'm talking about. Because price has moved now, you may not appreciate it. I think this NZ, this is the way to do. Okay, this is 15 minutes now. I gave this 15 minutes because I was telling somebody something. This is H1. Where's the one I have for H4? Oh, this is D1. I have one for you. Will see that that thing was just on top of 200 period moving average. I didn't find. Possibly I didn't screenshot the H4. It was this move, this thing. You know, when the price is going down, you see this moving average will be following it down because it's dynamic support and resistance. Now, at this point, look at where I took my profit. This candlestick, this bullish candlestick. Why? Because I know, you know, this is good. Look at what I'm looking for now. Look at it here. Look at it. Watch. Look at it. Look at 200 period moving average on H4. See, it is a powerful indicator. 200 period moving average. I took my profits here on top of this 200 period moving average. The market started buying. I left the market. I said, okay, if you want to buy, no problem. I've taken my profit at where I want to take my profit. But you know, this time market went up, came back, closed below. Immediately closed below, I initiated my sell. Immediately closed below, I initiated myself. On this my account, I have so many accounts I manage. On this my account, I initiated a sell immediately. I think I was in a meeting then, but when this one closed, I did not see it. But immediately this one formed. Now this one went back to have a handshake. Immediately it had that handshake. It did not even finish the handshake. I engaged my sell. Since then, I've been in that sell and I've locked my entry. I've been in that sell. 200 period moving average on H4 is a powerful indicator. Very, very powerful. It's 200 period moving average. In fact, see, 200 period moving average, 50 period moving average. From H4 up, H4 weekly, sorry, H4 D1 weekly and monthly. If you see it, price come to that point, my brothers, don't do any other thing. Check for a reversal. You'll be looking at candlestick pattern. Even if you don't know how to draw support and resistance, be looking at candlestick pattern to initiate a reversal of that trend. I have given you a secret. See, honestly, let me tell you the simple truth. What you are paying is not worth it. It's not worth it, seriously. It's just that people like us will like giving information, we like giving knowledge, but it's not worth the information you are getting. To be very candid, if you are a trader and you've met with some persons that say they want to teach you forex, you cannot get this information. They will always be giving you on the periphery, and that's why so many people lose money. I show you what I trade, and that is how it is. We're not hiding. UTB trading, we don't hide anything. We don't hide it. That's why we said, come and fund. fxpace did this sale for you. See, if you want to contract me to take you on a personal class, to be very candid, God knows, I don't take anything less than 300,000 naira. I don't take less than that. And if I weigh you, you have money. Somebody came to the office recently. The person wants to come and invest. He wants to invest, do fund management. While I was talking to him, he said he wants to even learn, because actually one of my students I taught sometime last year met his uncle and said, like that voice message I told you, uncle, I want to empower me now. Let me trade this financial market. I've learned it and all of that. The uncle said, okay, no problem. I will assist you, but you give me returns. He was scared. He came to me. I said, don't worry, collect the money. You know that this man is about investing 5 million for the guy to trade. And after I discussed with him, he said he wants to learn. He wants to learn. Brother, he said he wants me to teach him, since I taught his brother, because his nephew is making money. He just wants to boost his performance and his trade. He said I should teach him. I said, Oga, for me to teach you, because the man has money, I say it's 500,000. The man was begging in the office. He was begging for 400,000. We ended at 450,000. 450,000 cash. He's going to pay by Friday. That's it. That's what he told me. He's going to pay by Friday. See, let me show you. He even said I should recommend laptop for him. I'm not saying this thing because I want it to be sweet in your ears. Let me show you the chart with the man. Me, I operate an open door system. I don't think there is anything to hide in this business. Okay, yeah, Mr. Chike, look at it here. Look at, if you can see my chart, look at the laptop. I said, if you can see it, okay, I said, look at the laptop I recommended for him. HP Spectex Core i5, 4 gigabytes, 128 SSD, 140,000 naira. I said, this is like that my colleague owned you saw, that is smaller. Good afternoon, sir. He is, by tomorrow, he's giving me money to buy this laptop. He's ready for the class. He's giving me money to buy this laptop for him. By tomorrow, this laptop will arrive to my office and he will come and collect it. By Friday, he's paying 450,000 naira for his class. And that class, like I told him, is for 2 months. 2 months. I'll take him the class. So this is what I'm not telling him a different thing. This is what you are getting on a platter of gold. I just believe you will appreciate it. And the person that is, the company that is responsible is fxpace. And that's why they say train them so that they can trade with our platform. And that's why we say the best you can do for us is for you to trade with fxpace, so that at least they will know that they are getting value for all of this they have done. Okay, let's continue. All right, so I've just given you a signal that once you can just be looking at every chart. If you can just be looking at which one on H4 is a 200 period moving average or 50 period moving average on H4. If you see it, if it is H4, if it's on 200 period moving average in H4, it might be at 50 period moving average in D1. If it is H4 200 period moving average, in D1, it is 50 period moving average. That thing, when you see that, brother, please, what you just need to do for me, put a mark on that, the high it has created, scale down to a lower time frame. You can go to 15 minutes. You can even go to 1 minute, the much I care. Now sit down and be looking. As long as price did not break above that line, that 200 period moving average in the new time frame, the lower time frame, please just do well. Once it creates a wick, look out for that wick. Let it close into that your line. Once that has happened, confirmation, otito, confirmation done. What you need to do now is engage the market for a sell. If it is below the 200 period moving average, if it is above the 200 period moving average, engage that market for a buy. That means you will see wick below, and that is where you need to put your stop loss and engage the market for a buy. If the market moves, you lock your entry, go and do whatever you want to do. Or if you lock your entry, then you can enter another trade. If you have a $50 account, that is what they call risk management. Risk management. If you have locked, if in advance we'll be teaching you risk management, we'll tell you, see, you don't need to expose more than 3% of your account size. By the time you have exposed 3% of your account size, don't take any other trade until you have secured that particular trade that you are in. What we mean by secure is that the market has moved, you've locked it, then you can go and look for another trade to enter, because that one is as good as in the bank. So nothing will happen to that trade. So you gotta use that your 3% again to look for another trade. That means you have like 2 or 3 trades running on your account. We have done justice to moving average. I have told you, let me reiterate. Once price moves from one moving average and close above the moving average, once price close above, when I say close above, the body is above the moving average. All the body, the open and close is above the moving average, then it means that it's a buy signal. It's a buy signal if you're using moving average. Once that has happened, the next thing is that it will move from that moving average to the next higher moving average. That is the next resistance it will get to before it starts moving a little. Once it breaks that one, then you'll be looking at a higher moving average. That's why sometimes on my chart, you might see like 3 or 4 moving averages. Let me see. Good. On my chart, you might see, my chart is this one. My chart is like that. On this, my chart, let me see. Look at this one now. Let me remove it. Look at this, my chart. This is my chart. I have 1, 2, 3, 4 moving average. I know what they are doing. They are giving me a signal. 2, 3, 4 moving average. If this price, look at this price now. This thing is GJ, massive sell that GJ have sold. Why? JPY pairs. I told you this month we are sucking the milk of JPY pairs, sucking it very well. That's GJ. I'm very careful with those ones that can deplete your small account. GJ is another good one. GJ have sold massively within the period. Yesterday and today, GJ sold. Look at it. GJ have done over 344 pips. 344 pips. And look at GJ. Okay, now look at GJ. Look at GJ again. Look at H4. It did not even come close to H4. Look at the moving average for H4, 200 period moving average for H4. It did not even come close to the moving average. It is scaling down as GJ. So now I told you I have, that's how I trade move. That's how we trade moving averages. Once you see moving average crossover, have you seen that it moved from this 200 period moving average first to 50 period moving average? Now, since it break below the 50 period moving average, it has broken below 20 period moving average. Now the market now tells you it's a confirmed sell. The market could come back and do a pullback to 50 period moving average. Once it does 50 period moving average now, then if you're not in the sell, that is when you can engage your sell. Not now, not now. If you engage your sell now, you'll be unduly exposing your account. Where will you put your stop loss? It will be huge. What you do is that when it gets close to the moving average, get close to the moving average again, like buy back to the moving average, then it's an opportunity for you to engage yourself. Remember what we did trend line analysis. Trend line analysis. That's the same thing you apply here, trend line analysis. So at this point, if you were using your trend line analysis, look at the low it created, look at another low here, the market went up like this. Now look at it. At this point, here you'll be expecting a buy, but it did not buy, a break below. It has broken below with momentum. You see that this market, like I told you about void, this market now has created a void here. Look at it. Based on this candlestick that is forming now, it has created a void here. What will it do? This market in the future will do what? Will do what is called a repricing, either somewhere around here to fill this void. Once it fills this void, now you now see what is called a massive sell again. So it is at this point, this void, that you should engage yourself and not here. If you engage yourself, brother, this market has the potential to leave you. And if GJ leaves you, brother, it will deplete your account. It has high peak value. That is why if you have $50, I will not advise you to go to GBP pairs. Please don't do that. Don't do that. I am telling you because I don't want you to lose your money. I don't want you to lose your money. I want you to gain your money. fxpace wants you to make profit and collect money from the market so that you encourage others to come and trade this financial market very well. I've done justice to moving average. Any question, please ask me. Let's see if you can get any points. Any question, ask me. So that we call the classic close. We started at about 8:20, and we are now at 9:51. We've exhausted so much time. Ask me a question on moving average. Yes.
Hello.
I can hear you. Cynthia, speak.
Sir, I got confused when you said yes, sir. I said I got confused when you said the two moving averages. By the time you use the two moving averages, you said something that will prompt you to use third and fourth one. I got confused at that point. I don't understand.
No. See, as somebody that is just learning, listen, as somebody that is learning, that's why I said I don't want to give you too much information. It's as if I'm giving you too much. I need to be taking you gradually, but I don't know why it happens like that most times. That's my nature. What I said is that use two moving averages and monitor what happens on your chart. Use two moving averages. If they cross, immediately they cross. Now wait for price to come back to that moving average, especially it can come back to the smaller period moving average. It can come back to the bigger moving average. As long as it's not close above the two moving averages, then you are still in that market, selling the market, if they cross below. But if it crosses above, that's the smaller one, crosses above the bigger one, it's a buy signal. Take note. If the smaller period, you can write it down. If the smaller period crosses above the bigger moving average from below crosses to above, is a buy signal. So where do you buy? Wait for candlestick to come and touch the moving average before you buy. You can scale down to a smaller time frame and start looking for either a hammer we have thought. That's why we thought the candlestick first. You start looking for a hammer, you start looking for a harami that is close to the moving average for a buy. If the moving average crosses the bigger moving average from above, going down is a sell signal. Where do you sell? Wait for price to come back and touch the moving average before you engage your sell. Is that clear?
Hello.
Yes.
Hello, Mr. Jones. No, I'm not clear. Like you are contradicting it, or I'm not understanding. I don't know. You said if the smaller moving average crosses above, is a signal for a buy. And if it crosses from below, it's a signal for a sell.
See,
Hello?
Cynthia, listen, watch. Have you seen my chart now? Have you seen my chart? Cynthia, give me a confirmation you've seen my chart.
Yes, I can see it.
Okay. Now,
I can see it. I'm
Cynthia,
seeing it.
now, tell me the two moving average you can see on my chart. Which one is the smaller period? I'm asking you. Cynthia, answer me now. Cynthia, are you there?
I'm here. I'm here.
Cynthia, are you paying attention at all? I asked a question, now you've not answered me.
I'm seeing like 3 here now. That's why I'm confused.
You're not seeing 3, you're seeing 2 on my chart. You're seeing 2 moving averages. One is black, one is blue. Which one is the smaller period? I've discussed this now.
This small one you used as an example. The smaller one is blue. The higher one is black.
Okay, Cynthia, can you see my mouse now? Can you see my mouse?
I can see it.
Huh? Hello,
See
Cynthia.
it, sir.
Now, what happened
Hello,
at that
sir.
point?
Hello.
What happened at that point now where my mouse is among the 2 moving average? Cynthia, you're not talking to me.
I don't understand. I don't understand. That's the thing.
I said, what happened to the... You say you can see my mouse now.
I can see it.
Can you see this horizontal line, this vertical line I placed there? Can you see that red vertical line I placed there? Huh?
I can't see on it. I don't know whether. I don't know.
Cynthia, how is your phone?
Hello?
Is your phone, is your phone on the horizontals form? Did you auto rotate your phone so that it will become horizontal, or is it vertical?
It's vertical, sir.
How can it be vertical now? You will not see my chart clearly now. Do change it, do auto rotate on your phone and put it vertical, horizontally. It shouldn't be vertical like you're answering call. No, if you're on the chart, if you are on the Zoom like this, your phone should be horizontal like this. It's not like when you're answering phone, the way you hold it when you're answering phone. Keep it horizontally so that you'll see the chart clearly. Sometimes you can even zoom out and see the chart when somebody's, that's the cause of your confusion. Keep it horizontally. Do you understand what I'm saying?
Okay, sir. Okay, sir.
Because if you keep it vertical, you will not
Yes,
see my
sir.
chart at
I've
a
done
glance.
that now.
So can you see that that vertical line on my chart?
Is it the red line?
Yes.
Okay, I can see it.
Now, can you see those 2 moving averages? What happened there?
Yeah,
Was there
I
a
can
cross
see
there?
the. Yes, there was a cross there.
So which one cross which one?
The red crossed the black.
Red, no, is there red here? The only moving average is red here. Think I'll be fast now. Time don't go. I'm a family man. Let me take care of something. Look at the question comes to take us plenty time. I have blue and black on the chart. Okay.
Okay.
I think I actually do not know what the problem is, if it's your network or something. I actually don't know. But let me explain. This is the last time I will explain it now. If you look at this place, this is a blue line. The blue line is a smaller period moving average. This is the black line. If you look, if you look at the back, the blue line was below the black. Now at this point, it crossed. Look at the point where it crossed. That is an intersection where it crossed, where the blue line crossed the black line. Once you have seen this cross, it is a signal for a buy. It's a signal for a buy. You see the market started buying. Now look at this point. The blue line, which is the 10, crossed the black line, which is 20 period moving average. Immediately they cross it, the market started selling. Is a sell bias. It gives you a sell bias. Remember, market has been selling before. That's why we say it is a lagging indicator. It lags. It will tell you a signal after price have done so much thing. If you're looking at moving average, you would have missed this 1, 2, 3, 4 moves for the sell. But that's not a problem. You see at this point, the moving average, smaller period moving average crossed above the bigger period moving average, and the market gives you a signal for a sell. Look at here again. Here, if you can see my mouse, it gives you a cross. The smaller period moving average crossed the bigger period moving average, and the market started buying. It continues like that. So if you are engaging this market, once it crosses above and you see price on the body of that moving average, engage your buy. Any wick below is your stop loss. Engage that buy and look at it. Two things, if you understand price action, you would have taken your price this when it gets to resistance. But if not, you are waiting for price to break below that moving average. Immediately it breaks below the moving average. It tells you it's a sell bias. You take your profit and leave for a buy. I want to believe I've answered this question.
It's okay, sir. It's okay.
Is it okay?
It's okay. It's okay. Understood. Yes, yes.
All right. Any other question?
Yes, sir.
So yes, sir. Okay, Gerard. Okay, let's get to the question.
Yeah.
Oh, this is past
Yes,
time. Who is
Sir,
asking?
I have a question. It's good luck.
Okay, good luck.
Yes. Okay, so it's based not on this. It's based on the this thing, the app. The tablet app, does it look like this? Like the one on the laptop that have this thing for stream, or does it have all these features there? The tablet app.
The tablet app. The
And
tablet
FS
app will be
Print.
like the tablet app.
Yes.
Yeah, you should have these screens. Yeah, you should have these icons. Is it the icons or the tools you're asking me?
Yeah, I'm talking about the icons, like how this desktop looks like.
Is that the app you're using?
No, I'm not yet using it. I'm just asking. I want to get one.
If it's instead of using the iPad, is actually iPad you're talking about?
They call it tablet.
Tablets now. Okay, tablet is not like, it's not the iPad. Tablet is one that is a little bit bigger than the phone, right?
Yes, yes.
It's a little bit bigger than the phone. No, that one will have the same feature with the phone. It's the iPad that have the same feature with the laptop. That one will have the same feature with the phone. The only difference is that it will have a broader space, a broader view. Do you understand?
Okay.
Hmm?
Which one is the iPad? Is it not iPhone?
No, it's not iPhone. iPad is a bigger one. You know, they have the phone, they have the
Is it
normal phone.
Samsung Galaxy?
Huh? Yes, that
Is it
kind of
one of
galaxy.
Samsung
Yes.
Galaxy?
Yes, yes, yes. Where you can use the back, the casing as a rest, like a support on it. That's the Samsung Galaxy, the bigger one. Those Samsung Galaxy, they have the one like that is like phone. They have the iPad. You understand?
Yeah.
Or the tablet, but it's bigger. It has a bigger screen. The laptop is a little bit bigger than it. Do you understand me?
Yes.
But if not for mobility reason, I think I would have advised to get a laptop, even if it's a fairly used laptop. Just for mobility. Laptop have a smaller one. Like that one
I
I
have a
should.
laptop. Yes.
Okay, you have
Because
a
of
laptop.
I have a laptop, yes.
Okay. No
Because of
problem.
power.
Okay, power. No problem. So that's it. So by the time we come, hopefully tomorrow, I'll just show you how to put the moving average on the phone. How to put the moving average on the phone so that you know. But it's actually not difficult. The way you put that trend line, the way you put support and resistance, you'll still see moving average. You'll see. Can we do it for me? Can we use 2 minutes to do it? Let me log in and see on my phone. Let me see. So I'll know that this has been completed. So by the time we come tomorrow, we'll be talking about relative strength index and MACD. Relative strength index and MACD. Before next week, hopefully, we should be rounding off your intermediate class. Look at that Bitcoin I told you. It's going for a short buy. Market is giving rejection. Are you seeing rejection?
Recording in progress.
Rejection. That rejection is giving us a buy. Okay, let me show you. I'm now on this Zoom. Okay. Now, let me share my screen. So I'll do it sharply. Screen. Okay. Start now. Okay. We'll go to this. Okay. Yeah. So go to. Let me go to. USD. But I actually have moving averages on my phone. I have moving averages. But I will remove it and we'll get it. We'll put it back on our chart. Let me remove it. You come to F here. Did you see where I press F on your phone? You see F. You see F when you go to this share, something like this. You see F. Click on the F. Now I want to remove it. If I want to remove it, what I'll do is that I will click on this. Sorry. I will click on F. I'll come to this thing that looks like a sewage. Sorry, like a bin. I'll click on the bin. You see it has highlighted. It has a box. I can check the boxes and tell them I want to delete it. I'll just delete it. The two moving averages on my chart, I'll go to that box and delete. They're all gone. Now, if I want to put it back, what do I do? If I want to put it back, look, it's no longer on my chart. I'll go to that F. I'll click on F plus. Look at F plus, main chart, F plus. I'll come to, have you seen these indicators? Look at indicators, there are so many. But what we're looking at is moving average. On trend, you'll see moving average. It is called trend because it is on the body of the chart. That's why it's called trend. By the time we go to indicators, we'll be talking about oscillators, but that's for tomorrow. Now, exponential, I'll say 20, I'll do whatever, pixel, if I look at my this thing, I should choose green, I'll just click apply to close. I'll just click done. Once I click done, have you seen it now? It has appeared on my chart. Did you see it?
Yes, sir.
Yes, I'll need to go again and put 50 if it is what I trade. So what you need to do now is go back. You can say, okay, let me try 5 and 10 and see what happened. You can put any number on that your chart. What you're just telling the system is that for the past 5 candlesticks, give me the average. That's just it. If it is 5 minutes, you're telling the chart for the past 25 minutes, give me the average. If it is daily, you're telling the chart for the past 5 days, give me the average of what price I've done on this pair. If it is 1 hour, you're telling the system for the past 5 hours, give me the average of what price I've done. If you're doing it on H4, you say for the past 20 hours, give me, if you say period 5, you're telling the system for the past 20 hours, give me the average that market has done. That's what moving average is all about. So I'll come here and click moving average. I'll take 50. I'll change this thing now to 50. I'll click it, I'll change to 50. I'll exponential. Okay, now this one I'll put it as simple because it's a higher period moving average. Apply to close. I'll change the color. Look at the color. I'll change the color to which color am I changing now? Let me change to red, right? Let me change to red. Now, whatever, I'll just click done. Done. Look at it. It's there now. Have you seen it now? So when the market moved down, at this point, when the market moved down, look at that candlestick that moved down. It came back to touch the moving average. Have you seen that it came back to touch that moving average? At that point, when it touched the moving average, you can engage your sell. And if you engage that sell, you would have seen that you would have been in very good and massive profit. So that's how to put a moving average on our chart. You start monitoring the moving average. Look at it on the chart. If you understand what to do, you can actually trade with your phone. I can actually trade with my phone, do analysis with my phone, but I actually do not like it. I like using my laptop. But the phone is to monitor my trade. Look at this place. If you see this place now, you see that price is the candlestick is above the 2-period moving average. And if it is above the 2-period moving average, and you see there is a space between the 2 moving average, and the space is widening, it tells you that that trend is very, very active. The trend is still valid. But when the 2 moving average start coming together, compressing, it tells you that that trend in no distant time will come to an end. Especially in the choppy market. In the choppy market, that's when you see something like that. And look at the choppy market, I mean. Have you seen that the moving average, they are just together. They're just together. That's a choppy market. You actually do not need to do much. Wait for a breakout. Then you see moving average will now look at it. After then, look at how the moving average opened their mouth to tell you that the sell is very active until when it crossed above. Look at where it crossed above and the market started buying. So you can actually look at your chart, even if it is H1, even if you don't do any analysis, wait until price break above the moving average, the 2-period moving average, the 2 of them. Now come back to test it. At that point, when it comes to test it, engage your buy. If it is above, if both of the prices are below the 2 moving average, engage your sell when they come close to the moving average. You will see that you will have a good trend. You will leave that trade until when you see that price has broken below the moving average. That is when you can go out of that trend. But if it does not break below that moving average, you do not have reason to leave that trade because it is still valid. Okay, I think I've done justice to this. Miru, I hope you're fine.
Yes, I'm fine. I'm fine.
We appreciate you. Thank you.
All right, thank you, sir.
All right, Cynthia, thank you so much.
Thank you very much.
Yes, we'll see tomorrow, same time. We'll be talking about relative strength index and MACD if possible. Then on Friday, we may not have class because Friday begins my weekend and I don't like anything in between it. So Monday, we'll be talking about divergence and others. Have a good night rest, every one of us. From all of us at UTB Trading Academy and fxpace, we say enjoy your people. Thank you.
Good night.